Kwa sababu ameanza kusoma. International financial derivatives. I'll not even ask kama go through the notes. You warned me earlier. Now, under the international financial derivatives, we have the international contracts. International contracts, where we have the forward contracts. We have the money markets. Money market contracts. We have futures contracts. Futures contracts. Then we have options. Options contracts. Number 2, we have international arbitrage. The key parts, the key points, or the key areas that we must give it a lot of emphasis. The international arbitrage, we have triangular arbitrage. Triangular arbitrage. We have covered interest arbitrage. And we have locational. Locational arbitrage. Then the last part of this topic that is key, we also have the parity measures. Parity measures, they actually used to measure the point of equilibrium, where we have number A, interest rate parity. IRP. We have purchasing power. Purchasing power parity. That is triple P, purchasing power parity. And we have international Fisher's effects. International Fisher's effects. Somebody is asking for the link. The 3 key areas as far as that topic is concerned, and over and above this, international finance theory questions na test sana. So at least which is the theory is the international finance. Let's start with the first one. International contracts. International contracts. We say these are bilateral agreements. These are bilateral agreements entered between companies, operating in international markets. Entered between companies operating in international markets. So we start with the first one, the forward contract. Forward contract na money markets zinaendanga questions on them are tested together. So we'll talk about the forward contract and the money market, then you can do some questions on the two before you move forward. So forward contract is saying this contract is entered into today, to be implemented in future, at a predetermined, forward exchange rate. At a predetermined forward exchange rate. Next point. We simply determine the equivalent amount. Using the forward exchange rate provided. So tutakuwa tumepewa the forward rate. At the future date, what will be the exchange rate between the two countries? Ile tutakuwa tumepewa, we simply determine the equivalent amount. We'll see in the questions. Let's talk about the money market contract. So money market contract. We say it is similar to forward contract. Except that the investor is expected to trade. The investor is expected to trade during the contract period. The investor is expected to trade during the contract period while awaiting its maturity. The investor is expected to trade during the contract period while awaiting its maturity. So for the forward contract, tushaingia kwa hii agreement, relax. Ngoja time ifike. If you've sold to me, wait, I pay you. Expect to receive upon maturity. If you purchased from me, ngoja maturity ifike kunilipe. Kama umeniuzia, ngoja maturity to receive your cash. That is the forward contract. But for the money market, as I wait for that maturity to come, I go to the bank and I borrow some money so that I can be able to transact, knowing very well, if I had made some sale, kama ni 5 months, kama ni 1 year, after the 1 year, I'll be able to receive this cash and not nilipe loan. So I carry out some transactions. I do some business while I'm waiting for this contract to mature. So next time, Ivy. In case of a foreign receipt, i.e., where a sale has been made, you can only expect to receive if you made some sales, where a sale has been made. So in case of a foreign receipt, number one, for number A, we are looking at the steps. You're gonna step start to. So you can have it as number one. The investor borrows. an equivalent amount. The investor borrows an equivalent amount in foreign country. The investor borrows an equivalent amount in foreign country and determines its present value. And determines its present value. Step number 2. The present value is then converted. The present value is then converted into local currency. The present value is then converted into local currency using spot rates. Is then converted into local currency using spot. Spot ya michezo. Spot rate. Spot rate to the current rate. The rate today. Already in the present, but once you discount, those values are as of today. They're already at the spot rate, they're already at the present. So using the spot rate. Then step number C. Step number C. The present, the amount is then invested. The amount is then invested in local country. The amount is then invested in local country over the contract period. The amount is then invested in local country over the contract period. So in simple, we are saying that foreign receipts, shortcut, you're expecting a foreign receipt, you borrow foreign and invest local. Foreign receipts, borrow foreign, invest local. Let me explain myself. The 3 steps. Step ya kwanza, if you're expecting a foreign receipt, you borrow an equivalent amount in foreign country. After borrowing in foreign country, you get the present value, then you convert into local currency. Alafu ya amount you convert, una invest in local country over the contract period. Let's go to, in case of a foreign payment, skip one line. Skip one line. Then you say, in case of a foreign payment, in case of a foreign payment, so foreign payment ni wakati umebuy, sindio? So you can just put into brackets where a purchase has taken place. Kama umenunua utalipa, kama uliuza utareceive. Foreign receipt if you've made a sale, foreign payment if you've made a foreign purchase. So close the brackets. So under that, step number A, investor borrows an equivalent amount. Investor borrows an equivalent amount in local country. Just do the opposite of the other one. Investor borrows an equivalent amount in local country and determines its present value. And determines its present value. Number B, the present value is then converted. The present value is then converted into foreign currency. The present value is then converted into foreign currency using spot rates. using spot rates. Then finally, number C. The amount is then invested. The amount is then invested in foreign country. The amount is then invested in foreign country over the contract period. Then invested in foreign country over the contract period. So hapo kwa option ya pili tunasema kuwa foreign payment you borrow local and invest where? And invest foreign. Those are the key tips. If you're expecting a receipt, foreign receipt, borrow foreign, invest local. Foreign payment, borrow local, invest foreign. Why are you borrowing local to invest foreign? At the end of the day, we are going to pay in that foreign currency. You are investing local because you are expecting to receive. You are investing foreign because you're expecting to make that payment to that foreign land. A small subtopic, role of the bank. Role of the bank. Now remember, in all these international transactions, we don't transact directly, but we transact through the banks. So the bank is the medium of exchange. It's like a go-between kati yetu sije tunanunua na wale wanatuzia, ama kati yetu sije tunauza na wale ambao wananunua kwetu. So there's an aspect that the bank will have to play. So let's just say this. In case of a foreign payment, take a note. Talk about the role of the bank. So you're saying, in case of a foreign payment, the bank buys. So in case of foreign payment, the bank buys. While in case of a foreign receipt, the bank sells. While in case of a foreign receipt, the bank sells. Next point. The bank will always buy low. The bank will always buy low to buy cheaply and sell high. The bank will always buy low and sell high. We'll stop continue by saying, where premiums and discounts are involved, they are charged by the bank. Where premiums and discounts are involved, they are charged by the bank. Hence, the premium will reduce the value. The premium will reduce the value, and the discount will increase the value. Support nafanya opposite. The premium will reduce the value, and the discount will increase the value. You know, when the bank is charging, then somebody is either paying or receiving. When the bank is charging some premium, then the bank is gaining as this person is losing. So the premium is a benefit to the bank and it is a cost to this investor. So wakati bank ina gain, so lazima una lose. And the only way you can lose is to make it to reduce your value. And that's why the premium will reduce the value of the value of the currency, while the discount, the bank is charging a discount, the bank is losing. So as the bank is losing, the investor is doing what? Is gaining. So it's the opposite of what we are used to. Normally what tunasema premium, if you sell at a premium, kwa inaongeza the price. Yeah. But somebody now, we are not talking about the transactions, we are not talking about the bank transacting. We are talking about this company or this person who is either buying or selling. When the bank is charging the premium, that person has to suffer because the bank is gaining from that. So that person will suffer by losing some value. When the bank is charging some discount or offering some discount, then the bank is suffering and this person is gaining. So the premium reduces the value, the discount increases the value. Let's check some questions. Swali imepotea. Maybe ameona swali mahali. So you can have December 2021 question 4B. December 2021 question 4B. Page 21. December 2021 question 4B. General Limited. So part A, you're being asked about the defensive tactics to target company facing hostile takeover by predators. Can you get the 4? Or it's after next week? You can get the 4, sindio? Hata nakumbuka ni baki kitajataja hapa this week, kitajataja on Tuesday. Ilikuwa last week on Thursday. Na tukasema moja ni gani? Kulikuwa na poison, sindio? Poison pill. Usisahau kuweka pill. Ukaachia tu kwa poison. Ingine ikakuwa gani? Kulikuwa na white knight. Na ingine bado 2. Pacman defense pia ilikuwa. Anapo kama unaisikia kwa mara ya kwanza, enda usome. Ndio uelewe zinamaanisha nini. Alafu ingine ilikuwa Wakati kanakatoa sema legal suit. Sababu unajua tunaweza shtakiana, si ndio? Hiyo hufai kukosa. Differences between traditional finance and behavioral finance. So you go for capital structure theories. Jerram Limited, a United Kingdom-based firm, bought goods on credit worth $365,000 United States dollars from a firm in the United States of America. Now, even as we go through this question, it's very important to know home ni wapi, foreign ni wapi. Because you're talking about borrow foreign, invest local, borrow local, invest foreign. Local ni bonds, ndio. So lazima tujue ni nani foreign country ni wapi na local country ni wapi. Now, Jerram is a United Kingdom-based firm. So suko ni home. So home ni UK, foreign ni US. Bought goods on credit worth $365,000 US dollars from a firm in the United States of America. Are we expecting a receipt or a payment? We bought, so we're expecting to pay. We're expecting to pay, so you receive. You cannot receive when you bought. You pay. Payable in 6 months' time from now. The company is considering various choices in order to hedge the transaction's exposure and has collected the following data. We have the exchange rate, spot exchange rate, and we have the 6 months forward rate. Now, wakati tumepewa the two rates, like now the first one is talking about 1.3648 to 1.3722. One is about buying, another is about selling. So the spot exchange rate is that ile iko kidogo na mostly inakuanga hii. So we buy at this rate, the bank will buy at that rate, and the bank will sell at that rate. It's the bank that is giving the quote. Na hapo sasa ile definition yetu, ile story yetu ya role of the bank ina apply hapa. In case of a foreign payment, the bank is going to buy or the bank is going to sell? For foreign payment, the bank is going to buy. Ndio. Hizo ndio vitu tunasungwanga watu by the way. Ushashika the few tips kwa money market, life becomes very easy. Zinakuwa maswali za kupata. In case of a payment, the bank is going to buy. And once you discover that, then kindly, hizi ziko huku mbele zote, assume hujaziona. You concentrate on the buying exchange rates. That's how. Yeah, so therefore, spot rate yenye utatumia ni 1.3648, sio nyingine. And even the 6 month forward rate, you're also going to choose the one for buying because you're expecting to make a payment. The bank will have to buy from you because it's the one going to pay on your behalf. The annual money market rates are given as follows. You have the US dollars, borrowing and depositing. To deposit is one to invest. Sterling pound and the US dollar. The foreign currency option prices cents per sterling pound for a contract size of 15,000 pounds are as follows. Exercise price, 6 month call option and the 6 month put option. Determine the amount payable using forward market cover, money market cover, and the currency option. No problem. Let's deal with them. So tuanze na forward market cover. That is for the forward contract. Forward contract inakwanga very direct. Forward contract inakwanga very direct. You just simply ask yourself, we are entering into a contract today that we are going to pay $365,000 6 months from now. What will be the exchange rate? What will be the forward? What is the forward exchange rate? for the 6 months. 1.3515 still. Is it US dollars per pound? 1 pound will be equivalent to $1.3515 still. So if 1 pound equals $1.3515, how many pounds are you going to get out of the $365,000? Now your forward contract chakwa tumemaliza. Kusema na kutenda. So look at the equivalent pounds after 6 months. After 6 months. At the forward rate of ngapi? $1.3515 pounds per pound. So the long cut will be if 1 pound equals to $1.3515. How much of the pounds am I expecting from the $365,000? It's a matter of cross multiplication, senior. Division, senior. Kwa sababu tumepitia ile concept ya mergers. Can we try ile concept yetu? Tunajiambia we are having $1.3515 for every 1 pound. Out of, hapo tumejoroshwa, hii inaenda chini. So 1 pound for every $1.3515 out of $365,000. When you use that approach of ours, inaenda very fast. Lakini weka currency. Because ukiweka currency kwa umenyoroshwa umejua. Because at the end of the day, the dollar and the dollar should cancel out. Ukiona dollar na dollar ziko juu, unajua kuna shida. Because the common currency must cancel out, but na ile nyingine. Ndio. And you're saying you're getting how much? Tumia basi hata hii approach. Zote zinakubalika. 270. 0.2. 0.9. Thank you. That is the 2 months for the forward contract. The number 2, money market cover. So for the money market, we are expecting a foreign payment or foreign receipt. So foreign payments, you borrow. You borrow local, you borrow foreign. So you borrow local. It's our to end up where you invest. So you borrow local at what rates? What is the spot rate? The borrowing rate tumepewa, nataka uniambie hiyo rate. The borrowing rate neighbor tumepewa. 14 or 12. Local ni wapi? UK ama US? UK. Okay. Local ni UK. So we borrow at what rate? I think 14%. Alafu be very careful. The contract period ni how many months? 6. the 6 months. The rate is always annual. So you borrow local 8, 14 times 6 over. So you're having 7%. The annual money market rates are given as follows. So you have the borrowing rates and the deposit rate. Depositing is on investing. Our local, we are based in UK. UK about the pounds. The 14% hizo rates zinakwanga hapo zinakwanga annual. Kama contract period is less than 1 year, then kindly apportion the rate accordingly. Our contract period is 6 months, 14% for 12 months, we need the rate for 6 months. So can we get the present value? The present value of $365. Present value is about discounting. So this is about the PVIF, 7%. How many periods? 6 months. Sijasema hata hii ni period. Najua kusema 6 months inamaanisha nini? Ama kusema 6, hata ukiangalia kwa table pale wajasema years, 1, 2, 3, wamesema periods. It can be in months, it can be in days, it can be in years. So when you put there 6, then that means you're expecting it after the 6 periods. But now that is not the case. The maturity period is only once. And that period, and we have only one period that is within the 6 months. Kama contract ingekuwa ya 1 year, si period yetu ingekuwa 1. In the same case, kama contract ni ya 2 years, period yetu ni 1. The period is always 1, so you relate the rate with that period. Kama contract period ingekuwa 1 year, our rate ingekuwa 14% 1 year. Kama contract period ingekuwa ya 1 month, tungetafuta 14 divided by 12, 1 period. Contract period ni ya 6 months. The period is only 1 with a rate of 7%. So our period, it is always 1 because the contract is not going to mature 6 times. It's going to mature only once, but after 6 months. Exactly. It is only the rate that changes based on the duration. Kama contract ya 3 months, get the equivalent rate for the 3 months. Contract ya 4 months, get the equivalent rate for the 4 months. But those 4 months will be 1 period. Sasa 1 period. Kindly. Sasa inayo unacheck whatever unatumia formula. Advanced level, by the way. Can examiner decide to deny you the table? No. 1 over 1.07 times 365,000. 341. 129. 121.49. So foreign receipts, foreign payment, borrow local. And after borrowing local, you get its present value. Then on step number 2 was to convert that present value into foreign currency using the spot rate. So can we have the equivalent pounds using spot rate? Do you have the spot rate? The spot exchange rate 1 point what? So dollars 1.3648 per pound. So we are having 1 pound for dollars 1.3648 out of dollars 341 121.49. So how much pounds do we have? I'm aware the long cut. If 1 pound equals to $1.3648, how much of the pounds are we going to get from the 341 $121.49? Pounds ngapi hizo? How much? 249. 1? 940.
942.48.
So 942.48. So step number 1, swali la kwanza tunaenda pole pole. Foreign payments, borrow local. We have the borrowing rate in local. Ensure that the rate goes with time. 6 months, the rate for the 6 months. And get the present value, we have the present value. Then convert the present value into the foreign currency using the spot rate. Alafu step ya tatu ya mwisho, tulisema kwa tuna invest where foreign or local. We borrowed local, we shall invest foreign. Ndio. So the amount after investing is the same as depositing. In foreign for 6 months. We have the deposit rate in foreign country. What percent? I say 9%. 9 times what? 9 times 6 over 12. Time matters. 9% near 12 months. So I say 4.5. 4.50. Foreign payment, borrow local, invest foreign. Now concerning after the future value. So we are having pounds 249 942.48 times 1 plus 0.045. The compounding, the future value, 1 plus R. Our n is 1. So I can I raise for 1. So how much we expect there? One plus R. We are no longer discounting, now we are compounding. You're looking for the future value. The future value will be a favorite. So if you multiply, how much do you get? 261. 261. 189.8. 89. So that is it with the money market. Money market na kamba. Tafanya swali lingine. Tafanya swali lingine. Then because we are there on currency options, can just talk about options. Option contracts. Option contracts. So for options, we can say this. These are agreements. These are agreements that are associated with the right. That are associated with the right, but not an obligation. That are associated with the right, but not an obligation to either buy into brackets call option, either buy into brackets call. So option to buy is the call option, or sell into brackets put option. Put option. The option to buy is the call option. Option to sell is the put option. A given number of underlying assets. A given number of underlying assets. A given number of underlying assets at a predetermined price. At a predetermined price known as exercise stroke strike price. Strike price. Then you can skip one line up. Then you say now in reference to our question. So this was an option to buy. Then you want to make the payment. Is buying still. So you can just skip one line. Then you say, since the contract involves a payment. Since the contract involves the payment, then it is a call option. Then it is a call option. So examiner alituchanganya akatupa the need, the currency options information yake iko hapo chini. Let's get back to the question. The foreign currency option prices cents per sterling pound. Hapo ameziweka in cents. Wameweka in cents. How many cents make 1 pound? Wacha tuanze na Kenya. How many cents make 1 shilling? You know, it was grown up in a when cents were not, did not exist, right? 100 cents make 1 shilling. It's the same story. 100 cents make $1. 100 cents make 1 pound. 100 cents make 1 unit of currency. Say Kenya shilling for example. That's how 100 cents make 1 unit of currency. That's how. Ukisema Kenya shillings 2 cents. Then you're having the cents in Kenya shillings, you can get the equivalent 1 shilling. And you're by dividing, right? So kindly, 100 cents make 1 unit of a currency. It must not be Kenya shillings. It can be Uganda shillings, Tanzania shillings, pound, euro, dollar. That's high. Now, the foreign currency option prices, that is sent per sterling pound for a contract size of 15,000 pounds are as follows. Exercise price is 1.40 pounds. Dollars, sorry. The 6 months call option and the 6 months put option. Why don't you use the put option for the call option? Huh? It's a call option, clear. So can we have our exercise price? Wamesema exercise price is how many dollars? It's 1.40, and remember that is per pound. Clear. Then we add the 6 month call option. It is in cents, kindly convert it into dollars. Is it 4.7 divided by 100? 0.047. 0.047, clear. You cannot compare a cent with a dollar. You can only compare a cent and a cent for a dollar and a dollar. Shilling, cent, cent. So this one we are having 0.047. So our exercise price is $1.447 per pound. So 6 months from now, when we decide to exercise that option, the exchange rate will be £1 will be exchanging for $1.447. How much pounds should we have? How much pounds will we have of the $65,000? Equivalent pounds will be, we are having £1 for every $1.447 out of dollars ngapi? 365,000. So hizo ni pound ngapi? Much? 252, 246. But then kwa hii topic ile concept inakwanga tricky kushika ni money market. Money market. So probably get another question. Our contract is not for 15,000, it's for 365. So the 15,000 that we're given there is just to cause confusion. Sasa, our contract was for how much? 365. We can have seen this one. I think this one is the receipt. Page 50. Question 4A of May 2019. May 2019, question 4A. And by the way, at the report, because you put at the board, if you are told to advise on the best contract to take, would you advise them about the forward, money market, and options? And you advise based on what you expected to do. Are you expecting to pay or to receive? When you expected to pay, you go for the one that is high or low. The one that is low. So you are going to pay. But it's about a payment that you're going to make. So when it's a payment, you go for the low. When it was a receipt, you go for the high. Haya, tuangalie huyo Kazenga. This one, this is 270, this is 252. So you go in for the options. And this is money market letter 261. And let's check Kazenga, kuna anasema nini? Now, question 4A of May 2019. Now, Kazenga Limited is a Kenyan company. So home is Kenya. Yeah. Home is Kenya. So it's a Kenyan company with a substantial proportion of its trade with companies in the United States. Kazenga invoiced a US firm $60,000 receivable 3 months from now. Is it a payment or a receipt? Yes. Now a receipt. You are invoiced out here. Yeah. So you're expecting a receipt. Foreign receipt, borrow. Foreign receipt, borrow. Hii ni receipt sasa. Wakati unajibu alafu unasikia nimenyamaza kidogo, unajua unafanya sasa step. So foreign receipt, borrow. Borrow foreign. Then you invest local. Itaingia. Foreign receipt, borrow foreign, invest local. Foreign payment, borrow local, invest foreign. Now this one is a receipt. Then we are told additional information. The borrowing rate is 3% above the bank base rate, while the investing rate is 2% below the bank base rate. Kizungu mingi. Naweza ulipita English. These rates apply both in Kenya and the United States. The bank base rate in Kenya and the United States is 15% and 10% per annum, respectively. So you can get the borrowing rate in US, and you can get the borrowing rate in Kenya. You can also get the lending or the investment rate in Kenya and in US. The exchange rates in the forex market between Kenya shillings and the United States dollar are as follows. Spot exchange rate, Kenya shilling per US dollar. So we buy at 103, we sell at 105. That is the spot rate. 1 month forward rate and 3 months forward rate. Are we interested in 1 month or 3 months? So 1 month we can add. With a 15K per day. Examiner loves causing confusion. So you should not allow him to confuse us. Amaha. Calculate the amount to be received by Kazenga Limited using the forward contract hedge. So forward contract hedge. Now, the role of the bank, we are expecting to receive. The bank is buying or the bank is selling? The bank is selling. And when the bank is selling, what is the rate? 105 for the spot rate and 102 for the 3 months forward rate. So therefore, tukianza na the forward contract, no wonder ni 2 marks. So for the forward contract, we simply ask ourselves, how much is the equivalent Kenya shillings using 3 months forward rate? Three months forward rate of how much Kenya shillings per dollar? 102 of shillings, 102 per what? Per dollar. So are we having shillings 102 for $1 out of how many dollars? 60,000. So ni shilingi ngapi? 60 times 102. Ama uende the long cut. See dhambi. $1 equals to 102 shillings. How much of the shillings will I get from the $60,000? How much? 620,000. Forward contract period. Sasa tunakuja kwa money market hedge. Money market. Foreign receipt or foreign payment? Foreign receipts. We borrow? Foreign money. Don't worry, it's let us not be afraid of making the mistakes. We learn from them. So we borrow foreign. We have the borrowing rates. Yangapi? Wacha we analyze. Tuko hapa na Kenya na tuko hapa na US. Tuangalie the borrowing. Alafu tuko na investing ama deposit. Now, note number 1 and note number 1 and note number 2. The borrowing rate is 3% above the bank base rate. We have the bank base rate in Kenya, 15, right? So for borrowing, it will be 15 plus what? Plus 3, right? And the investing rate is what? 2% below the base rate. So 15 minus what? 15 minus 2, right? So meaning the borrowing rate is 18% and the investing rate is 13%. In English. What up in US? What is the best rate in US? 10%. 10%. So borrowing rate will be 10 plus what? 10 plus 3, which is 13%. And the investing rate 10 minus 2, which is ngapi? 8%. So therefore, foreign receipt, we borrow foreign. At what rate? 13. Is it 13%? Foreign is US. Foreign rate ya US is 13%. But it is 13 times what? 3 over time, very important. 13 times 3 over 12, what do we have? 3.25. So can we get the present value of $60,000? Sasa kama ulilenga formula yetu, ukapenda tembo hii unashaikaje kwa tembo? 1 divided by, can I say 1.0325? 1 over 1 plus r raised to power n. N is 1. So how much of the dollars? The PVIF are 3.25% 1 period. 1 plus r raised to power negative n, or 1 over 1 plus r raised to power n. N is 1. This gives us how much? 0.38. So foreign receipt, borrow foreign, and get its present value. Our first step to memorize. The second step, we convert into locals. So equivalent Kenya shillings at spot rate. What is the spot rate? Spot rate is 103 or 105? 105. The role of the bank currently. You're expecting to receive, the bank is selling. So at shillings 105 per dollar. So how much is our Kenya shillings? Shillings 105 for every $1. Out of dollars ngapi? The 58 way. Kenya shillings ngapi? 6101. 694.92. That's the step number 2. Step number 3, we invest local or we invest foreign. But kama umeborrow foreign, una invest local. We've borrowed foreign, you are now investing local. So therefore, our last step, amount after investing. Can we say in Kenya? Yes. For the 3 months. Do you have the investment rate in Kenya? Of ngapi? Okay. It's also 13%. 13 times 3 over 12. 3.25%. So therefore we are having 6105, 694.92. We increase it by 1.0325. One plus R. Oh, this 101, sorry. 6101, right? Six. 6.3. Like that. And that pass up on the family advice. For required number 3. You go in for money market or forward contract. We're expecting a receipt still. So my advice for English. Hivyo andika sasa sentiment. Nimesema advice on the best hedging strategies here. So the best hedging strategy is money market. Hata usidane reason. Hivyo tu inatosha. Kama unataka kuongeza chocha. Sawa, ongeza. I know so unasema the best hedging strategy is money market, therefore we should avoid forward market. I want us to try two. One is November 2018. Question 3B. November 2018, question 3B. And it was very notorious before they break. That's what we call prediction. Now, Shigiri investment, so we'll try that one. Then we'll try one that has both buying and selling. 2018, is it November? Question 3B. Page 55. November 2018, 3 gold, page 55. Chigiri Investment Limited. Now, we are told that Chigiri Investment Limited is a company based in Kenya. So again, Kenya is home, right? The company exported goods on credit to a firm in the United States of America. A receipt or a payment? The receipt. The company expects to receive $800,000 in 1 year's time. Here, we are lucky. The period is 1 year. So hakuna kwa portion hizo rates. Ndio. Kikuja kama hii na hiyo apportionment umesahau, you pass without knowing. The current spot exchange rate is $1 for 60 shillings. Again, fortunately, hawajatupa the buying and selling, wametupa tu rate moja. So again, to avoid some confusion there, the examiner was fair. However, Chigiri Investment Limited created a probability distribution for the forward spot rate in 1 year as follows. So can you get the expected forward rate? The summation of the forward rate times the probabilities here. 1 year put options on the US dollar are available with an exercise price of 63 and a premium of 4 shillings per US dollar. Premium will reduce or increase. Premium will reduce. 1 year call options are available in the US dollar with an exercise price of 60 and a premium of 3 Kenya shillings per dollar. Premium reduces the price here. The future spot rate is estimated in a year's time to be 62 Kenya shillings per 1 US dollar. That's about the futures. The following are the money market annual rates, borrowing and deposit. Kenya ni home, US ni foreign. Determine whether a foreign market hedge, money market hedge, or currency option hedge would be the most appropriate hedging strategy for the company. 9 marks are there for free. I know they're there for only 3 class. When you go to the example, see here. Eba kwa nimeshafunga kalamu. Singekuwa umemaliza FOWARD. Yes. Neba shaenda nyumbani, ni mwili umebaki. So for the FOWARD contract, ukiandika na IBAN anaandika. So do you need the equivalent Kenya shillings? So at the FOWARD rate of 61 times 0.2 plus 63 times 0.5 plus 67 times what? 0.3. What is our FOWARD rate? What is the expected FOWARD rate? How much? Computer inaleta ngapi? 63.8. So per dollar, so you're having shilling 63.8 for every $1. Out of how many dollars you're expecting? $800,000. So ni shilingi ngapi? So 63.8 times 800,000. What? 40,000. 40,000. That is it with the FOWARD contract. Then money market. Is it a foreign receipt or foreign payment? Foreign receipt you borrow? We borrow foreign. At what rate? I think 12%. So we borrow foreign at 12%. Enough for portions in the contract period in 1 year. So can we have the present value of $800,000? So 800,000 times 1 over 1.1. giving us 714 to 85.7. Right. Can we have the equivalent Kenya shillings at spot rate? We have the spot rate. Tuliambiwa spot rate ni ngapi? 60 per dollar. 60 per USD is nil. So we are having 60 shillings for $1 out of $714 to 85.7. Which is how much? The 714 times 60. $40. 42. 632. 42,857. 142. 0.86. Then our last step, we invest where? We invest local still. So amount after investing, I'm depositing in Kenya. Kenyan go local. For how long? For 1 year. Do we have the deposit rate in Kenya? Of how much? 9%. So you're looking for the future value. So we are having shillings 42,857, 142.86 times 1.09. For 6, 714, 25.71. For money market tumemaliza. Then for the options, is it a call option or a put option? It's a put option, clear. So this one becomes a put option. Why put option? Because it's an option to what? An option to sell. So do we have the exercise price? Exercise price of how much? How much? Are the I saying 63? Yeah, additional information on number 1. The 1 year put option, 63, right? Then we less what? We less the premium. The premium of how many shillings? 4 shillings. So therefore our exercise price becomes 6 shillings 59. So 59 per USD. So 1 year from now, when we exercise that option, our exchange rate will be 59 Kenya shillings per dollar. How much Kenya shillings are you going to expect? So equivalent Kenya shillings, 59 shillings for $1. Out of how many dollars we are talking about? 800,000. So 59 times 800K, 47, 200,000. Those are our 9 marks. Then to make it 10, they want you to advise. Forward contract, money market, or currency option? Remember, it's a receipt. Which one offers us the best? Forward contract. So advise the most appropriate hedging strategy. So forward contract is the most appropriate hedging strategy. Kuna kamoja ka 7 marks unaweza jaribu, naona neighbor amepit. Question 5C of May 2018. 5C of May 2018. Okay, so much for very direct. Page 63. So let's read it together, just for the sake of interpretation, where that could be picked up. Now, Kikumi expects to receive 750,000 euros from a credit customer in the European Union in 6 months' time. He expects to receive, it's a foreign receipt, right? We borrow foreign. Now, the period is now 6 months. The rates take care of the time. The spot exchange rate is 2.349 euros per US dollar. So home ni wapi? Home ni US. Alafu foreign ni? Sema European Union ni sawa. Ama sema kwa euros. So home is USD and foreign is the euros. And the 6-month forward rate is 2.412 euros per USD. The following commercial interest rates are available to Kikumi Limited: deposit rate and borrowing rate, Euro and USD. Kikumi does not have any surplus cash to use in hedging, and the future euro receipt evaluate whether the money market gain or call hedge will be prepared. And the examiner has not told you to show your workings. Can you just guess the last one?
No.
But then okay, guess na iko ukweli unapata 1 mark. 7 advanced. Hata amesema evaluate. Kwani how do you evaluate? Evaluate by looking at it.
Advanced.
Examiner anajua penye kwa anaificha. Before question 1 amesema tu vizuri, show all your workings. And all is in capital letters. Okay, so you show all your workings. It will be one way of wanting you to pay, because you'll be looking for those workings. Now, this is what I suggest. We share some more. Can I share some more videos of the same? Najua accumulate those videos tutazianzia next week. Next week is the do or die. Wait for you guys. Yeah. Not the do or die, is the do. Hapa hakuna die. So I'll share some more videos on the same, and even if I don't share in the YouTube, nimefanya maswali mob za international finance, such that even if we agree to finish today, on condition that you go through the videos in YouTube, which I can share the exact videos zenye tumebakisha, then I'll have no problem. If we agree